Did I hit the button? I did. All right. Welcome back. I got it that time. Yeah. Welcome back to the Tim and Tim Show every Tuesday at 10 a.m. Eastern Time. This week, we're talking about why lending relationships matter. If you follow Tim and I on Facebook or some kind of social media outlet, you'll see that I made a post about a text message I got from a lender recently. And let me tell you, those lending relationships go a long, long way. And if it weren't for this lending relationship, I don't know what position we would be in right now. And just wanted to reiterate the fact that having those relationships and fostering those relationships, those are the differences between being able to do a decent deal and do a really great deal. One thing I like to tell anybody that likes to learn from us, and this is my mantra, is that the bank is your biggest investor. They will typically give you up to 75 or 80% of the purchase price of your property. So you absolutely want to spend a whole lot of time working on building relationships with lenders, just the same way you would build relationships with your other investors. And hey, good morning, Dennis and Joe. Let me there we go. So yeah, with that, Tim, what do you think about that? I mean, I know that's a good thing, but tell us a time where you had a lending relationship come through and save your bacon ultimately. I mean, it's always the biggest stress that we have in this industry is when our debt comes due and how are we going to take it out, right? So I'm sure you got a couple war stories under the old hatch there.
Oh, the old hatch. Yeah. Yeah. No, I mean, like they say, I mean, the old adage, right? Relationships are everything.
Mhm.
What's the other one you hear thrown around? Your net worth is your network or something like that. But lenders are part of your network, big part of your
Yeah.
network. But yeah, I mean, honestly, one of the I can give you two sides of it, right? Like I can tell you, back in 08 and 09, when lenders weren't around to do anything, having those relationships would have been amazing. It would have saved a lot of things, but they just weren't there. But it definitely taught me the power of relationships with lenders. But I did have a case one time where um, I needed to get out of a flip that I was doing, um, and either sell it or refi it. And I was having a really tough time getting it done because we were coming up into a kind of a downturn in the economy, and lenders were tightening up. And um, I had a pretty good relationship with a personal lender that I knew, and he stepped up and did it for me. And that probably saved three houses that I
Mm.
had. Otherwise, I would have either had to sell them at a discount or maybe even sell at a loss. Um, but instead they became nice rentals for me. That was, I got to be honest, guys, that was like one of the times where I was like, oh, this rental thing's kind of nice rather than just flipping all the time.
Yeah, right.
So
Building up
so
that
not o-
cash flow.
yeah, so not only did he kind of save my bacon, as you would say, but he a little positive sign there was like, hey, I learned that I like to kill and eat, but I also like a little positive cash flow every month too. Um,
Mm.
but
Yeah.
man, I will tell you, this current market right now, this reminds me a lot with lenders. This reminds me a lot of 20 years ago, 18 years ago. The difference being that lenders are around, but they're being really, really difficult. A lot of them are being very, very risk adverse, and their mitigation strategies are not beneficial to us. It's definitely beneficial to them. Can't say that I blame them in a lot of cases, but right now relationships are everything. They are absolutely everything. Tim, you posted that one over the weekend, I think,
Hmm.
uh, which is a really good one. I think the other way, we've had another experience recently where um, the relationship with the lending broker probably wasn't great. And, we saw what, I mean, our buddy up in Ohio has been on our ass a little bit
Yeah.
about the fact that he got how many done while we were trying to get the one done.
Yeah.
Um,
Right. Yeah.
yeah. So, that's a place where the relationship, right? If we had used a different lending broker, and he's out there, I know he's listening. if we had used a different lending broker, we maybe end up in a different spot, or at least faster.
Maybe. Right.
Yeah.
Yeah. You just never know. Obviously, hindsight's always 2020,
Yep.
and you always speculate on what could have been after the dust is settled. But
Yeah.
nonetheless, we're here now. We're alive.
Nonetheless.
Live to fight another day, as they say. But every instance is a learning lesson, right? Learning how to interpret people, learning how to ask better questions, better track records, all of those things lend to experience over time, which is absolutely important to have.
God.
So, hey, Todd, good morning. All right. So, what's the best way to build relationships with banks? And yeah, have money. Okay. No.
Have money.
Yeah. Right. The best way to build a relationship with a bank is to be a recurring relationship customer, right? Um, I mean, I've had so many conversations with banks on some refinances or even acquisition debt that we're looking at getting from like small local regional banks and things like that. And literally the response is, well, it's like, I need you to have deposits on hand because this can't be a transaction. It's just not a transaction, right? Like we're looking for somebody that is going to do a banking relationship with us so that we
Yeah.
can learn to know and trust, and lending becomes easy too because we see their track record. We've done multiple loans with them. They keep the deposits and the transactional activity at our bank account. All of that matters. All of that adds up, right? The difficulty on the operations side of it is, yeah, you could have a lot of logins to a lot of different bank accounts. And let me tell you, I got a spreadsheet full of logins now, and can be quite annoying. And Tim and I, we're doing another loan with well, you just completed a loan with them, and we're doing another loan with them, and then we potentially have yet another loan with them. So now 3 loans in 90 days or so with this one particular bank. And we had the conversation of, hey, we kind of like working with these guys. Maybe the bank that we do all of our business banking with right now, we did a loan with. We didn't have a great experience. They weren't really flexible with us. They it didn't feel like a partnership. It felt like a black and white checkbox, right? It was like you either meet this or you don't. There's no
Right.
consideration to how much business we bring to them. Had no consideration that we had, 30 bank accounts with them with 2 commas in the bank account, right? In reserve accounts, making them money and making them interest. Yet they wanted to kind of uphold by the letter of the law here on this rather small loan in comparison. And it kind of left a bad taste in our mouth. And we've always kind of been looking for another banking relationship. Maybe this is the new one, right? Maybe we'll see. We have some meetings actually set up with them over the course of this week. Yes, this week, and we'll talk with them. We'll see. Hey, what do we like about our current bank? Here's what we like about our current bank. Talk to me about your setup, right? Here's what we don't like about our current bank. Talk to me about your setup, and then you just start asking questions because
Yep.
there are going to be different operational systems that they have to abide by that may or may kill the deal for you. In other words, right, that you might not like working with them. So it's important to make sure that you're interviewing your banking relationship, especially in the real estate world. I mean, maybe if you're just a personal checking account, it doesn't really matter all that much because um, it is fairly transactional, right? But like when you come to the lending side, commercial lending side, and you're borrowing millions of dollars from them, it becomes very much a relationship business. They want to know who you are when you walk in the door.
Well, and when they present that to you guys, like just a little tip here, like let them know you're open to a relationship, because sometimes when banks
Hmm.
come out of the gate, they themselves can be very transactional, right? Like they're like,
Yeah.
I'm doing this loan. I want this deposit account as part of the loan, right? So,
Yeah.
and that's a very transactional look at it, so feel free to use that opportunity to go to them and go like, hey, you're talking about one account and one loan. Like it, I know banks like deposits. I know they like transaction activity, right? So let's talk about multiple accounts, like tons of transactions, not just one, right? And kind of give them that idea of like, hey, you want $500,000 sitting in this one account because of these loans. How about if we talk about that number and kind of attack it a different way, where it's not all about just this dollar amount. It's more about like, let's build a relationship here, right? Let me open 10 accounts with you, right? And we're talking hundreds of transactions every month, and maybe it's still three or $400,000 sitting in the bank, but like because what a lot of people don't realize, guys, is like banks don't just want deposits on hand; they also need transaction activity, right? So
Hmm.
it's kind of a little bit of a give and a take, and when you start to talk to them in those terms, they start to go, oh, this may be a relationship, not just one loan. We may be talking lots of accounts as their business grows, right? Um, and that's really kind of how you get in there, is you let them know that you're open to those conversations too, um, and and give them that idea, like, hey, I'm an up and coming business, right? Like, treat me well now, and we'll see what it looks like later. Um,
Hmm.
because
And
because
one thing that's important for you and I is that they have a branch near you and a branch near
yeah,
me.
yeah, yeah,
So you
because
got
the
to
one
think about their location as well.
yeah, because the one thing I've never been a fan of, and guys, I'm going to call out a bank here, but I don't think anybody from their corporate's calling us. Um, to be honest with you, like I've never been a fan of going to like Chase, for example, because you're just a number to them. So
Hmm.
I'm not going to say you can't build that business relationship there. I know some of you guys listening. I know some guys that doing this the same thing that we do have business relationships there, but it's not the same as that regional or more local bank, right? Like that is a completely different level of customer service that you're going to get there. Um, like I'm not even sure that there's guys that have like nine figures in the bank that get that kind of personal service from like one of the top five banks in the country. Um,
Hmm.
you
Yeah.
know,
It's just all about volume there,
yeah,
and hey, you got to pick what works for you. And we have found more success working with the smaller banks and a bit more leniency as you start to build a relationship with them. But the other outcome of having those relationships is, and why it's important today in today's market, in today's real estate cycle market, is that deals right now are tough. I mean, NOI
yeah,
is getting crushed. Property values are gone down with cap rate decompression. Um, Cap rate decompression and a whole lot of other factors that are causing property values to go down. Well, when you have a banking relationship, they're more willing to make
yeah,
exceptions. you know um, some conversations that we've had recently with a bank was that we normally do 125 debt coverage, but for you I'll do 120, right?
right,
And it's like, oh, well, that frees up a lot of stuff and changes the game, right? And when you have that relationship, they're more willing to make exceptions for you, right? And that's kind of what I was saying earlier about that the loan that we did with our current banking partner, is that there were no exceptions. It was very black and white.
yeah,
We had a lot of banking transaction relationship with them established already, and there were no exceptions. And it just kind of left a little bit of a bad taste in our mouth, right? Because they knew the value was there, they knew the cash flow was there, but because it hadn't met one checkbox, they're like, we can't do it. I'm like, in the grand scheme of things, this doesn't even matter. And they agreed, but they're like, sorry, but we can't do it.
yeah, yeah,
And it's like
and
that's why it matters today, right? When deals are difficult, if you can get those little exceptions here or there, that's the competitive edge or
yeah.
advantage that a lot of other people don't have.
Yeah, and then guys, like, so that's a piece of it. And then I would also say, Tim, I think you would agree based off what we've been through a bit, is that just doing what you're telling us you're going to do. Like we understand that the proceeds may move a little here and there, right? We understand that the closing timeline may move a few days, maybe a week, so here and there. But showing up and ultimately say, when you say, hey, based on what we're seeing, we'll be able to do this, right? Like being in the ballpark and being able to actually close it is a big deal, right? And so, I think that's where it comes from. Like I think a lot of people approach banking relationships or lender relationships as is, you're out there trying to prove yourself to them, and you are, but they're trying to prove themselves to you too, right? Like
Yeah, it's
that's
definitely a two-way street. They need us as
yeah,
much as we need them.
yeah,
Banks make
and
money by lending money. That's how they make
yeah,
money.
and knowing that, when back to the beginning of the conversation where you're talking about like a bank that saved your bacon in that relationship, like knowing that, hey, I got a timeline I have to hit, I know what the market looks like, who's getting in the car with me, and we're going to see this thing to the finish line, right? And
Hmm.
knowing that whoever gets in with you is staying in with you all the way till it's done, that's big. There's a
Hmm.
value to that for sure.
Yeah, the relationship borrower ends up getting just better execution, better service, faster decisions, right? Because
Right.
they don't have to underwrite the individual as much. You know, they underwrite the deal more so than anything,
Right.
and they give you more flexibility and honest, truly honest feedback, right? And you can have an honest conversation with them and ask them, okay, well, what did you like? What didn't you like about this? And what would you like to see in the future? This particular bank, I'm actually going to go bring their team out to lunch next Wednesday. I booked it. I'm going to go down to see them. I haven't met them in person yet, which we didn't really need to, but it's a good sign of, good show of faith ultimately. But I'm going to go down there and take them out to lunch. We're going to talk about the deal, what they liked, what they didn't like. What do they want to see in the future? How can we continue to grow our relationship together? Because we've liked working with them, making the exceptions that they have for us, and kind of I don't want to say bending the rules, but just being more flexible with us has shown its value to us immensely. And now we have two reliable banking partners that whenever we get another deal, I'm going to send it over their way and say, hey, what can you do here? Right. And then there's a third bank that I've used down in South Carolina that they did lending for me. They allowed me to have a second lien position to do the seller financing. I paid back the note 3 years early, which they were very happy about. Never missed a payment. Every time I went and drove to the property, I'd stop in and I'd say hi, and I'd just sit down in the office and talk with them for 15 minutes. That goes a long way. Now when I call, like, they know who I am. They know my face when I walk in the door. When I tell them I got another deal I'm looking at, they're like, yeah, I want to do more lending with you, right? Like, you're reliable, you're trustworthy. We know who you are. You're not just another email that's coming across my desk, right? Everything that we're saying right now is true also for all of your private investors. We're talking
Yeah.
specifically more so about banks right now, but
Right.
private lenders have the same flexibility, right? And even more flexibility if you have a good relationship with them. I don't know. Do you actually follow Tiffany High?
Me, no.
Oh, Tiffany High is somebody I follow, who was big in kind of like the flipping and wholesaling world, and now she's doing a lot more private lending. She made a post over this weekend where she was talking about how she, as the bank, right, the first lien position bank, made more money on the deal than the flipper did. And she's like,
Mhm.
"Oh my God, I can do infinite amount of these, in comparison to having to deal with the material orders and the construction delays and the weather and this and that and the other thing." And she was like, "Even if I make a little bit less, it's so much easier." But if you build a good relationship with somebody like her who does private lending, and you consistently borrow and you consistently pay it off on time and you do what you say you're going to do, I guarantee you there's going to be flexibility there in the future.
I'm kind of curious who that flipper was.
I don't know. Yeah, but I did the math. I was like, I mean, generally you would try to make like 10 to 15%, right? Profit on a flip, roughly. So I was like, it's probably a
Who
probably
the
a five hundred
flipper?
thousand dollar loan. Yeah.
Mm,
More than that?
I, man, I'm not doing a flip for 10%.
Wow. I don't know. Well,
I'm
I
not
also
doing a
don't know what she
500k.
lends at.
Yeah, I'm not doing a 500k flip for 50 grand in profit. Um,
Wow.
not
Some
more.
people would.
No, yeah,
It's
some people
entry level
might.
house nowadays, Tim.
Some people might. Yeah.
Yeah.
Oh no, it's not
Um,
about the price point. It's about the profit. I understand
yeah.
500k is an entry level house, but
Yeah. Yeah.
you
Yeah.
know,
Right. Too much
I'm not
risk.
spending too much risk, and I ain't spending my time for 10%.
Yeah,
Um,
right, right. So, oh, well, I mean, the other point that is, that I want to talk about is like, what do lenders actually care about when it comes to lending? And it could be true that this was a first time borrower, so she charged extra interest and points for the risk. And
yeah.
over time, I mean, that's very common in the hard money lending world for
Oh,
all you
yeah,
single
for sure.
family people, right? They'll charge, well, if you've done less than 5 deals, your rate is 15% plus 3 points. Or, you've done 5 to 10, then it's still 15% but 2 points. And if you've done 10 plus, it goes down, maybe 12% interest plus 2 points or something like that. And maybe that person was on the higher end of it because they're trying to build a relationship. But over time, what are you going to give up in order to make sure that you have a long term relationship? I mean, that it directly comes back to like lenders care about track record, right?
Yeah.
They assess your risk based on your track record. And it doesn't matter if you're in the commercial multifamily space or any real estate facet or asset, right? Your track record and your communication quality and your transparency with the bank is going to be absolutely paramount, right? Like, you know, uh, It's another way that Tim and I, conversely on the flip side, right? Transparency. The way that we win deals is I literally have phone calls with the brokers that are selling deals, and I send them a Zoom link. I
Yeah.
share my underwriting. I literally go through my income, my expenses, my capex, my cap rate, my price per door exit, and then I show them what returns I'm going to get from my investors. I'm like, look, man, this is where I'm at,
Right.
and that confidence in the broker to, one, not disclose all my information to everybody else, but also to give me honest feedback, is where the relationship continues to grow. And
Right.
my offer might not be the highest. And I know for a fact it's not the highest, but I can guarantee you, because of the relationship that I have, they're going to go to the seller and try to sell my offer, even though it's lower, more so than the other guy, because he's like, well, I know this guy's not going to come in and retrade, or I know that this guy's underwriting is actually accurate. I know that this guy has the relationships with the banks in the area to get this deal done, which it all ties together, right? All of it ties together.
Yeah, 100%. And when that's another piece too. Like when you have those lender relationships, like Tim's talking about, as a buyer, it strengthens your sell. It strengthens your offer as well, right? Not
Yeah.
not only do we know you're not going to retrade, but hey, you got those lending relationships. When you say you're coming and you're going to close, there's a better chance you're closing.
Right.
Because you're not out
Right.
there like, scratching under the couch looking for change and trying to pull together some lender that, may or may not know you. Um,
Hmm.
because
Yeah. That first time relationship's always tough.
yeah, because, obviously, your cash buyers, typically one of your highest surety to close, but an experienced operator with good lending relationships is probably right there behind them.
Well, and also think about the transactionalness, right? Like
Oh
all
yeah,
cash buyer generally does less deals.
right.
One that's using more leverage does more deals. And if you're a
Typically,
lending broker, or selling, commercial lending, or a selling broker, or any, you want to build a relationship with somebody who's doing transactions if you want to make money, right? So
yeah,
pros and cons of everything, right? At the end of the
yep,
day, but don't undermine the thought that the the relationship is the most important part. The underlying foundation of it all is the
oh yeah,
relationship, and your level of trust and transparency with the other side of the table is only going to be reflected if you have that relationship, right?
yeah,
And that's why going to these like networking events and going to meet people in person, or driving to properties or banks and like shaking their hands, like it goes so far. Like it really does. I mean, what banker is going to text you at 5:30 on a Friday night, still working on your loan? Not most. They generally are like, 5 o'clock, I'm out of here. But this guy cares. He's like, I know that they need this loan done. I told them it would be done by this date. This is what I need to do in order to deliver
yeah.
for them, and I know that they're going to deliver for me, and we're both going to make money.
Yeah, yeah, 100%. And Tim, that's a really good point, because we've seen that a couple times recently, like with some of our lending relationships, right? You had that guy shooting you text at 5:30. We had a different lender who we have a good relationship with that, 5:30, 5:45 on Friday was giving us updates on three different loans that we have with them, related to draws. Hell, I think we even got a Sunday email from one
We
of
did.
them.
Yeah, we did.
Yeah.
Yeah, they were thinking about us over the weekend. How
Yeah.
nice.
So, and there's always the joke about bankers hours, right? But when you
Yeah,
got
right.
that guy that's sending you stuff late on Friday, on Sunday, when he's thinking about, oh, I need to get these guys an update, that tells you a little something about the relationship, I think.
Speaking of,
So,
I think they do owe us another update on something else
mm,
that was supposed to be done yesterday.
they gave us an
Ping.
update on that. They actually gave
Oh,
us an
they did?
update on that.
I must have
Yeah.
missed it then.
Yeah, you did.
Well, it's
It's
just
coming
because I'm
today.
sitting around doing nothing, Tim. That's why.
Yeah. They sent us an update and said it was coming today. Um,
Perfect.
yep.
Love
So,
it.
yeah.
Well, good. All right.
Uh,
What else do we want to talk about? Why lending relationship? I mean, that was kind of the meat and potatoes for me. I mean, really, just like the difference between being able to get a deal done,
yeah.
and like what the relationships get you. Um, I'll say this: we've done a number of Fannie loans and Freddie loans as like agency loan takeouts of some short-term bridge loans. I have yet to see an increase in relationship capital built there at the agency level, just because they're so big. So yeah, I don't think there's much. And you know, it's funny actually. Now that I'm thinking about it, we had a kind of conversation with another one of our investment partners that I asked them. I was like, "Hey, have you guys ever done like agency takeout loans?" And they're like, "What's that?" Because they always use small local banks, right?
Small local.
Um, yeah, and it's just like, you know, I just feel like if you invest the time to build the relationships where they're necessary like that, then you're ultimately going to end up with less deals and more profit. And that's ultimately what you want, right? Because the stress with operational challenges when you have so many people and employees and things moving around all the time, like just checking on things all the time is a full-time job, you know, and it can be exhausting. So, you know, if you can simplify and what's it when you bring it all together into not coagulate, but
I don't
make
know
it
where
more
you're going.
concise. I can't think of the word. Anyways, whatever.
Make it more concise.
Make it more concise. When you bring everything together instead of having it all spread out. So, all right. I don't have anything else to chat
Condense.
about today. So, condense maybe. I don't know. Whatever. I'm not a math. I'm not an English major. Words are hard.
Words good.
Why use lot word when few word do trick? So, all right,
Yeah.
guys, that's all we got for today. Reach out if you have any questions about how you should be approaching your lenders or conversations that you want to have with them or you don't know how to approach them or what types of questions that we would ask or what types of questions you should ask. Happy to answer anything. Shoot me a message on Facebook and glad to connect with you. So if that's it, we will see you again next week. Peace.
All right. See you guys.